The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts, let's just keep a reminder on what we are watching out there with Israel carrying out strikes on Iran. According to two US officials who added and told Reuters there was no US assistance or involvement in the operation, stocks have been diving in early Asian trade led by a sell-off in US futures, and safe havens like gold and the Swiss franc are climbing along with crude oil prices on this news that Israel has conducted a military strike on Iran. The Department of Homeland Security Secretary Kristi Noem has pledged, meanwhile, to liberate Los Angeles at a press conference that was dramatically interrupted when federal agents dragged a Democratic US senator out of the room and forced him to the ground and handcuffed him. And of course, some very tragic news in India, where more than 240 people were killed when an Air India plane bound for London crashed moments after taking off. The world's worst aviation disaster in a decade. Let's make sense of it all with Ilya Spivak from Tastylive. Gosh, Ilya, so much happening and all just in the last hour or so. What are our futures telling us? I imagine that S&P 500 futures is plunging somewhat.
Good to be here with you, Juliet. And of course, there's quite the assortment of heady news here. The S&P 500 futures, of course, off overnight after this strike that Israel is conducting in Tehran. I think the important thing here is not to get caught up in the geopolitics and to notice that we've been stalling against this resistance around 60.50. Just short of the 6,100 figure for a few days here. And we've been stalling against it despite the fact that we renewed the US-China trade war truce in London this week. We got some supportive CPI and PPI data that suggested that the inflationary spook from tariffs isn't coming. In fact, the PPI numbers were especially impactful because they suggested that we didn't have businesses covering for consumers this time like it was in April, where they ate all of the increase in margins. That didn't happen this time. And so there was speculation that the Fed might have clearance to start cutting rates sooner rather than later. And yet stocks couldn't make hay of any of it. They just kind of sat stuck there. This is, of course, this situation in the Middle East, a shocking catalyst, needless to say. But it looked like we were soft-footed going into it, and this looks more like a trigger than the reason for the sell-off. And so it looks like we might be looking quite a bit more vulnerable going forward. I'm eyeing levels here at about 58.40 and then 57.25 or so after that.
Okay, what about what we're seeing with the US 30-year, so longer dated yields here? Because rates have been retreating. There has been this comment about, is US exceptionalism over? But when you see the headlines that we're seeing today, does that make people flow back into treasuries? What are we seeing?
Well, we're certainly seeing that the treasuries market is finding once again that safe haven bid. But of course, that's the most current bar that you're seeing on the chart here. And obviously, it's a screenshot. This situation is very fluid, but we're still looking at bonds significantly higher. And that's, by the way, despite the fact that crude oil is aggressively spiking here, which might have been seen as inflationary downwind and likely to keep the Fed more so on the sidelines. We clearly saw that there was a break higher in the earlier session, and that follows those PPI numbers, which come on the heels of CPI numbers the day before, suggesting that the Fed might have clearance to get moving on these rate cuts. In fact, Fed funds futures have adjusted significantly. They were on the hawkish side of Fed expectations at the start of this week. Even before this attack, they got to the dovish side slightly. That was a significant swing. And so it looks like we have a bottoming in the bonds that we've talked about here on the trade for a few weeks, that's starting to really extrapolate out. We're looking at about 115 as the key level here ahead. If we can take that out, then we might be heading back to May's highs on the bonds. But of course, we have to take the geopolitics in context. That's going to impact significantly how this goes and muddy the waters, as it were, on what is, I think, still at its heart a Fed narrative.
Okay, and when it comes to currencies, you talked about bonds, maybe the May high, but euro looking like it's back at April highs.
That's right. And one of the more interesting aspects here, the dollar, of course, finding a haven bid through all of this, but very modestly so. We're not seeing the kind of runaway U.S. dollar buying that might have been expected to accompany this kind of episode. That certainly has been the case in earlier episodes, let's say the onset of the Russia-Ukraine war, last year's tensions between Iran and Israel and the back and forth volleys there. The dollar was able to capitalize on that much more. Here, just like we see in the bonds, a strong move against the dollar, the euro rallying very aggressively over the past day around those increased Fed rate cut expectations. It's pulling back here a little bit, but the modesty of euro selling and the modesty of dollar strength here seems to be very emblematic of the markets still very much eyeing a weaker dollar, especially if the Fed gets this clearance. We'll see what happens with U.S. consumer confidence data tomorrow. If inflation expectations in that survey, the University of Michigan survey, come in a little bit to help with the message from the CPI and the PPI data, I don't think the dollar is going to have a very easy time, even with this risk aversion. If we take out these highs around 116 on euro, 120 could be next.
All right, watch for 120. Ilya, thank you. Have a great weekend. Ilya Spivak there from Tastylive. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.